Banking Law, Unit 1. So the first concept in Unit 1 of Banking Law is History and Development of Banking Systems in India. It's a really important concept and has been asked for 10 marks many times in first unit. Origin. So when did the banks originate in India for the first time? So Hundi system existed in days of Mahabharata. So during the time of Mahabharata, there was this system called Hundi system. So what do you mean by Hundi? Hundi is derived from Sanskrit word hund, which means to collect. So Hundi in today is called as bill of exchange. So the seller created a Hundi. So what this Hundi was that whenever a vendor was selling something, he used to create a bill which was called as Hundi. So Hundi is nothing but bill of exchange, and it existed during the time of Mahabharata. Development or evolution of banking systems in India. So the development is divided under three phases. One is pre-independence period from the years 1786 to 1947. Then we have post-independence period from the year 1947 to 1991. And then we have a liberalization period from the year 1991 till present. So the first period, pre-independence period. So in this, the first Bank of Hindustan, was established in the year 1770 in Calcutta. And it failed, the Bank of Hindustan failed and ceased in 1832. It stopped working in 1832. Then during that period, over 600 banks were registered and only few managed to survive. During British rule, the East India Company established three banks called the Bank of Bengal, Bank of Bombay and Bank of Madras were established by Britishers. They were called as presidential banks. So these three banks were called as presidential banks. Later in 1921, these three presidential banks were merged into single bank and they were called as Imperial Bank of India. And this Imperial Bank of India was nationalized in 1955 and it was named as the SBI, the State Bank of India, which is the current largest public sector bank. So this is how SBI came into existence. So the next period is post-independence period. After independence, all major banks were private. So after independence, all major banks started to work as private banks. But people didn't trust private banks at that time. So people in rural areas were still dependent on many lenders for financial assistance. They were not going to banks, they were going to many lenders for financial assistance. So government decided to nationalize bank under the Banking Regulation Act 1949. So RBI was nationalized in 1949 and SBI was nationalized in 1955. So the government nationalized 14 banks from the year 1969 to 1991. So the aim was nationalization was that so that the rural people should come to bank instead of going to money lenders. The next was the liberalization period. In this period, monitoring and regulations of our bank was needed. So the banks were nationalized, but now there was a need to provide regulations, rules for those banks. So for the stability and profitability of the nationalized banks, government set up committee under the leadership of M. Narasimhan to manage reforms in Indian banking industry. So the government set up committee to regulate these nationalized banks. So the introduction of private sector banks in India was done. So the major addition was the introduction of private sector banks. Banks could run privately and then RBI gave 10 licenses to private banks at that time. So this is the history and evolution of banking systems in India. The next question is commercial banks. What are commercial banks and their functions has been asked repeatedly in first unit. So what is the meaning of commercial banks? Commercial banks are financial institutions which carries operation of a deposit and withdrawal of money for general public, and they work for profit. So they work as a regular bank of taking deposit and giving loan, and their purpose is for profit. They do this for profit. Functions. So what are the functions of commercial banks? The first is the primary functions. So their primary functions are receiving of money on deposit. So account deposit, they receive money and a deposit in their bank, and they provide they return those money with a certain interest. The next is lending of money, giving loans. So the commercial banks give loans to the borrower. Loan is nothing but given funds in exchange of promissory note or bill of exchange. So their primary functions are taking money and giving loan. The next is transferring money or remittance. So that they transfer money from one bank to another bank. These are the primary functions. Secondary functions. What are the secondary functions of commercial banks? Issuing of various forms of credits. So for example, checks, credit cards, etc. they issue. The next is acceptance of a bill of exchange. They accept the bill of exchange. Then the next is factoring. Factoring means when a person is about to receive money, for example, say he will be receiving money after 4 months from certain individual, he has an invoice for it. So he will go to the bank and sell that invoice to him if he needs urgent money. So the bank will give him urgent money on charging certain commission. Say for example, he is receiving 10 lakh after 4 months, so the bank will charge rupees 40,000 commission and give him 9,60,000 rupees in return of the invoice, and the bank will take a full money from that person after 4 months. This is called factoring. The next is safe custody of valuables or locker facility. So the banks provide locker facility. And then we have acting as executors and trustees for customers. So the banks provide executors and trustees to their customers to execute their wills and etc. The next we have preparing of income tax returns for their customers and furnishing guarantees on behalf of customers. Example of commercial banks are Canara Bank and SBI Bank. The next concept is kinds of banks. So what are the kinds of banks in India? First we have central bank. So central bank is nothing but it is a government bank which guides and regulates other banks in country. So it is the main head of the bank, and RBI is the Central Bank of India. Functions of central banks: guiding other banks, then issuing currency notes, implementing monetary policies, and then supervisor of a financial system. The next kind of bank is cooperative banks. So they are organized under State Governments Act. Their functions are giving short-term loans to agricultural sector. So they give short-term loans to agricultural sector only, and they promote social welfare by providing concessional loans. The next is commercial banks. So they are organized under Banking Companies Act 1956. Their main object is profit. They are owned by government, state or any private entity. They tend to all sectors ranging from rural to urban, and public deposits are main source of funds for these commercial banks. So they charge interest on instructions of RBI. Commercial banks can charge interest only on the instructions of RBI. So types of commercial banks. Under commercial banks we have further types as public sector banks which work for government. Then we have private sector banks which works for private. Then foreign banks whose headquarters is in foreign but their branches are in India. The next kind of bank is regional rural banks. In this kind of bank, we have special types of commercial banks which operate in rural areas only. So the regional rural banks are special kinds of commercial banks, but they operate only in rural areas. They don't operate in urban areas. So they were established in 1965 under the Regional Rural Bank Act 1976. What are the functions of regional rural banks? So they provide concessional loan to agricultural and rural sectors. The next we have local area banks. So they were introduced in the year 1996 under Companies Act 1956. They are organized by private sector for profit. So these banks are owned by private sector only and they work for profit only. The next is specialized banks. So specialized banks are the banks with a specific purpose. They only work for that purpose only. They are called specialized banks. Types of specialized banks. We have Small Industries Development Bank of India, SIDBI. So their function is giving loan for small scale industry and business. So they give only loan for small scale industry and business. Then we have Export and Import Bank, EXIM. So they give loan on exporting or importing of goods. Then we have National Bank for Agricultural and Rural Development, NABARD. So they give assistance to rural and agricultural sectors. Then we have small finance banks. So they give financial assistance only to unorganized sector of India. So they give loans and financial assistance to them. They are controlled by government and central banks. Then next we have payment banks. So in payment banks only deposit of 1 lakh can be done and they don't give any loan. Paytm Payment Bank is the example of payment banks. So these are the kinds of banks. The next we have is indigenous banks. So what is an indigenous bank? These are private individuals who act as banks providing loans and financial services. So they are private individuals. They are not banks, but they act as bank because they provide loans and financial assistance to other people. What are their functions of indigenous banks? They are accepting deposits. They take deposits from people. The next is providing loan against securities. They provide loan but only with a security. So they take land or gold, anything they keep with them and they provide loan. The next is discounting of hundis. So they give hundis. And then a remittance, transfer of money. They transfer money from one bank to another bank, indigenous bank to another indigenous bank. The next concept is how banks or bankers make a profit. So what are the ways by which a bank or bankers make profit? It has been asked for 10 marks. The first source is interest income, second source is capital market income, and the third source is fee-based income. Interest income. So the bank, it is the primary source of a bank for profit. So they take money from deposit. The bank, it receives money from depositors and this deposited money it gives to someone who needs loan on interest. So this is how they make profit. They give loan and charge interest income. The next is capital markets income. The next source of profit for bankers is capital markets income. It is a marketplace for businesses and investors. So what bank does in this is they spend on businessmen and investors. They help them invest in sales and trading services. So they provide sales and trading services. Then they provide underwriting services. So they help underwriting the capital expenditure. This bank they hire a team, employ a dedicated team to help their underwriting services. Then we have M&A advisory services, mergers and acquisition. So if a bank or an individual or a business is trying to merge with another business, then the bank will help assist them by charging certain fee. Then the next source of income for bank is fee-based incomes. So bank charges fees for their services. So they charge fees for their services. Example is credit card fees, checking accounts. Then they charge fees for saving accounts. Then mutual fund revenue, investment management fees, and custodian fees. So the bank charges fees for its services. It is a source of income for them. They make profit out of it. So the next concept I will cover in next video.